Something unusual just happened in the US job market, and it's got economists talking. Despite concerns about the economy slowing down, hiring remained stronger than expected last month. What does this mean for you, your job prospects, and the overall economy? Let's break it down. The US economy added 147,000 jobs in June, surprising many analysts who expected far fewer. Most predictions had placed job growth closer to 110,000. The unemployment rate ticked down slightly to 4.1%, showing ongoing stability in the labor market. But where the jobs were added tells a more complex story. A large share of the gains came from state and local government roles, especially in education, as well as continued growth in healthcare. Meanwhile, private sector hiring slowed, with employers adding just 74,000 jobs in June, the lowest number in nearly 9 months. Some of this shift may be due to seasonal adjustments, especially in the education sector, which often sees job fluctuations at the end of the school year. Revisions to earlier months also showed stronger job growth than previously reported, with April and May's totals revised upward by a combined 16,000 jobs. At the same time, there are signs that certain industries are hitting a pause. Manufacturing jobs declined for the second straight month, and sectors like professional services and leisure and hospitality showed weaker growth compared to earlier in the year. One possible reason? Many businesses are choosing to hold steady, not hiring aggressively, but also avoiding layoffs as they navigate uncertain global conditions, especially related to trade and overseas markets. Surveys have shown a drop in job openings among companies that rely heavily on international sales. The labor force participation rate, which measures how many people are working or actively looking for work, edged down slightly to 62.3%, the lowest level since late 2022. Analysts say this could reflect a mix of aging demographics and economic caution, with some workers stepping back from the job hunt altogether. Still, investors seemed reassured by the overall numbers. Stocks moved higher after the report was released, suggesting confidence that the economy remains steady even as certain sectors slow down. For now, the Federal Reserve is expected to keep interest rates unchanged as it monitors trends in inflation and employment. So while the headline number looks solid, the underlying data points to a more careful and uneven recovery. Some sectors are thriving, others are pausing, and many companies are still watching and waiting before making big decisions. Stay tuned. The next few months could tell us whether this is just a summer slowdown or the start of something bigger.